What's going on, guys? It's Henry back with another video, and in this video I'm going to be talking about small account strategies. I know so many people out there are trying to grow their small portfolios, and today I'm going to be talking about some strategies that can turn $70 into $430 or even $700 into $4,300. So yes, I'm going to basically talk about how to 6x your money with a small portfolio. I'm going to be discussing 3 different strategies that I want to share with you today, and I think you're going to really like what I have for you. Also, make sure to check out the free email newsletter that I have in the description. I usually give free weekly value over there, and it also doesn't hurt to hit that like button and subscribe. Now, something important I'm going to discuss is closing positions, because a lot of students have asked me about closing positions, when to do it. So we're also going to discuss setting stop losses. It's very important to risk management. It's also very important if you want to be a profitable trader. So people think that you need a large portfolio to make a lot of money, and I want to debunk that myth because it's actually just not true. You can actually turn a smaller portfolio into a medium and a larger portfolio. It just takes skill, knowledge, taking proper risk, managing your losses, and of course, risk management. And the combination of these things will allow you to grow a small portfolio, because it's not like you have to have a 7-figure portfolio like me to see some good returns. I'm going to be showing you a few different trades on 3 different stocks that I think is a very good trade. And in fact, I would place that trade if the market weren't closed right now. But as soon as the market opens up, I'm actually going to be making these plays. All right, so the first thing that I want to show you guys is I'm going to open up AAL. And the reason why I want to open up American Airlines is because the strategies that I'm going to be using today, well, one of the assumptions is that the stocks are not going to tremendously shoot up or fall. Basically, our assumption is that a stock is going to continue to go sideways. In fact, all 3 strategies that I have today is going to consider that a stock is going to go sideways, because part of that reason is I think the market is high, but I also don't see any catalyst for it to fall any lower. So I think the market will trend sideways. But anyways, you can pick your own stocks. This is just me showing you what I'm going to be doing and my thought process. You don't have to copy this. By no means am I a financial advisor. Just go ahead and learn everything that you can, and then apply this knowledge to your own stocks and your own watch list. So taking a look at American Airlines, it has had some volatility. However, what I've noticed is as soon as it jumps up, it always tends to fall back down. In fact, if I go to 6-month chart, it pretty much hasn't gone anywhere in the past 6 months. I mean, sure, it did start off around $25, but if you take a look right over here, I'm going to scroll down right now, around July 19th, this stock is still trading where it's been on July 19th. So for the past 4 months, this stock has gone up, down, up, down. It's pretty much traded sideways, gone up and then back down, up and then back down. And I kind of understand that this pattern is going to continue with American Airlines. I don't see any reason that it's going to fall too much lower. I don't see any reason why it's going to jump back up in the next couple of days. So for this week, I'm going to show you a strategy that is basically going to turn about $70 into $430. I'm going to open up that position in Robinhood, but real quick, as you guys can see, every time it jumps back up, it trends down and then it'll go sideways for pretty much a week. So this is about a week. This is about a couple week period right here. This is from the 16th and this is going back to the 16th. So this is an entire month where American Airlines has traded sideways. Essentially, that is the thesis for American Airlines. That's where I'm going to be starting here. I'm going to go to Trade American Airlines Options, AAL Options. Now, you can pick any date that you really want. I typically like to go for weekly options or bi-weekly options. The reason why I like to go for weekly options is because not a whole lot of stuff can happen in a given week. I mean, unless there's an event like maybe earnings or there's a Fed meeting, then there's usually not a whole lot of events that can turn an option upside down. And if the option doesn't go in my favor, I can always set a stop loss. I can always close the position. And it's much easier to monitor a position in a given week than have a option that is out for a month or 3 months. That longer term time period is just harder to trade because it's easier to bet on a stock going sideways in a given week than for a stock to go sideways in a whole month or a whole 3-month period. So now I'm going to look at the option chain. And again, as an option trader, my assumption here is that the stock will move sideways. So the first thing that I'm going to do is I'm going to sell a call option that is near the money. So right now, American Airlines is $19.53. I'm going to sell the 19.5 strike, and that's basically at the money. It's only 3 cents off. So I'm going to click right here. It's going to be worth $30, and I'm going to click sell. This is going to be $30. And now what I'm going to do, this is very important. I'm going to go buy a call option. You guys will see I'm going to enter a custom order. So this option strategy is going to be a custom order, and you're going to see on the right side right over here the exact payoff, the risk that I'm taking, and the profit that I'm going after. Okay, so going for buy call option, I'm going to buy a leg above and a leg below. This is going to be important when you guys see this strategy actually play out. Getting started here, 19 strike. This is the leg below the 19.5 that we have open. So I'm going to open up this call option right here. This is going to be a buy. Now I'm also going to buy the 20 call option right here. Now, if you notice, the cost is 42, but what I'm going to do is right here where you see this custom order, there's a little drop down menu here, and I'm going to go to custom. Rather than a 1-to-1 ratio, I actually don't want to open up 1-1-1. I'm actually going to go ahead and sell two 19.5s. Going to the custom, clicking right here, going right here where it says 19.5, the option that I have sold, I basically want two of these sell orders to account for this 1-and-1 buy order. All right, cool. Now that we have entered that, I'm going to scroll down and you guys can see that this is a very beautiful chart, and I'm going to explain it right now. The max loss right here is $12. However, your max profit is $38. So as you guys can see, in this example right here, you can triple your money. You can actually bet $12. That is your total max loss. You can't lose any more than that. And the total max profit is $38. Now, again, the assumption here is that American Airlines stays right around the center point where it's currently at right now. So at this point right here in the middle is going to be a max profit of $38. And you're only going to start to lose money if American Airlines goes past $19.88, or if it goes below this point right here, which is $19.12. So as long as American Airlines stays within this range, which again is considering that the stock is going to move sideways, you're going to be able to collect that full $38 at this very peak, and you're going to collect different varying amounts right here. But obviously it's still very easy to double your money even at this point right here, or this point. As long as you stay within this green area, you're going to see a profit. Around this area, you're going to see a double, and at the very peak, you're going to see a triple on your money. Now, this is a strategy that is fantastic for growing a small portfolio on a stock that isn't going to move very much. I probably wouldn't do this strategy on something like a Tesla where the stock is moving tremendously up and down. I would do this on a stock that is not moving very much, because you're going to have a much better chance at making a profit. So I also like this a lot because what I teach my students is basically weekly income strategies where we're collecting 1 to maybe 5% on the higher end per week. This is a good strategy for some of the people that want to aggressively grow their portfolios. Maybe 1 to 5% a week isn't enough for them, so they want to go for something that is maybe riskier or has greater leverage. This is a strategy where you can actually double and triple your money. So some of the people with smaller accounts are going to want to incorporate this strategy into their toolkit. All right, guys. So real quick, what I want to show you is this other trade on American Airlines that I found that can turn $1 into a maximum profit of $49. So basically, you can 49x your money, or basically 50x your money, going from $100 to $5,000 on this single trade right here. And the reason why I want to show it to you was because I forget where I was looking at that trade from $700 to $4,300. I don't remember what I was looking at, but I found a better opportunity that I want to share with you. Now, what I did here was the very exact same trade, except I went for December 3rd. Again, I went for the same trade that I just showed you guys, but I bought the 18.5 call, I bought the 19.5 call, and I sold two 19 call options. Now, the total cost for this trade is $1. You can get started with just $1 here on this trade, and essentially, as long as American Airlines stays within this range from $18.50 up to $19.48, or right around where it's at right now, or right around the current price, then you're going to make somewhere up to $49 depending on where the stock actually ends up trading. And again, the maximum amount you can lose here is $1. So there's very little risk here and a very huge reward on this trade. Now, the next stock I want to talk about is Palantir Technologies. This is a stock that when you look at the chart, it has been going sideways for a very long time, and recently it has fallen down quite a bit. Now, regardless of the reason why it has fallen down, usually this stock will move up or down, very similar to American Airlines, which is why I picked this stock as a second strategy that I want to show you guys, because once the stock goes up, it'll come down, it'll consolidate, it goes up again, goes down, consolidate, goes up, goes down, and consolidates. So this is basically the perfect time where I see another strategy that an investor or an option trader can play for a stock moving sideways, really benefiting and cashing in on a stock not doing too much in the near future. So in a given week, I can see Palantir continuing to move sideways because the pattern right here is moving up, down, sideways, up, down, sideways, and then again up, down, and now I expect the stock to go sideways, because once investors come into a stock and then they crash the stock by taking a lot of profit, at that point, if there's no catalyst, there's no reason for the stock to move up or down again. So usually it trends sideways before there's another big catalyst or some news event or earnings or some announcement that is going to move the stock. So for this given week or even the next couple of weeks, I expect the stock to move sideways because from this period of July 13th to about August 13th, it was basically a whole month where the stock just moved sideways. I mean, it's not a full month, but it was about 28 or so days. From this period of October 4th to about October 15th, again, a 2-week period. Sure, the stock moved up, but it actually just moved up from $23 to $24. So that is basically a sideways move. And now since the stock is around $21.41, I'm going to come into my Robinhood platform right here. Again, I'm going to go trade PLTR options. Now, this strategy is going to be somewhat similar, but I'm going to show you guys the slight difference and exactly how much money you can make here trading Palantir options in a given week using another sideways option strategy, which requires almost no money. I mean, I'm going to show you guys how much money it's going to require. First of all, I'm going to go sell a call option. Now, this is going to be very similar because I'm going to sell an at the money call option, selling this one right here, the 21.5. And again, I'm going to do the same thing that I did before, and you guys will see the difference in just a second. I'm going to go buy call option, okay? Now I'm going to move for the leg lower, right under 21.5, okay? So this is the current leg that I have open, 21.5. And now I'm going to buy the leg under, the 21. Okay, so I'm going to click here, bought this for $75. And now I'm actually going to go back to the 21.5 and buy the leg above it. So the leg at the 22 strike price. Now I'm going to click buy right here, and that is going to complete this trade. However, now I just have to adjust the custom order. So again, I'm going to click this little drop down menu right here. I'm going to go to custom order. And now for the option that I sold, I'm actually going to go right here and enter 3. So rather than going for 2, I'm going to enter 3. That makes this payoff a little bit wonky. But what I'm going to do now is I'm actually going to sell 2 of the highest strike call options. So rather than having 1, I'm going to click 2 right here. And now you guys will see right here that as long as this option stays within the certain range, that you're still going to have a massive benefit. Now here, this is another strategy that considers the stock moving sideways. However, now if the stock has a tremendous rise, then you are going to lose some money. However, again, taking a look, the max loss is $39, but the maximum profit is $61. So you can almost double your money in this trade. And again, the reason why I'm going for this type of trade on Palantir is we go back to the chart right now. This stock has had a tremendous pullback and now it continues to fall. So we've had one big pullback where we had a major sell-off. We had a little bit of a bounce back. However, that bounce back was not sustained. And now the stock is continuing to fall. And then it had another small red day. Actually, if I go to the 1-month chart instead here, it's going to be easier to see. This stock has now gone down on a one single trading day of basically 9 cents. So I can see the stock continuing to fall down just a little bit. But again, have your own assumptions. Don't just copy what I'm telling you right now. Go pick a stock, have your own assumptions. And if your assumptions fit this description, then go ahead and run this type of strategy where you expect the stock to potentially slightly pull back, but basically you expect it to trend sideways and stay within a certain range. This strategy is going to be phenomenal. Now, it doesn't have as much return as the strategy that we just had before. However, again, turning $39 into $61 is going to be greater than a 50% return, or right around that 50% return mark in a single week. So obviously someone can put up $3,900 and turn it into $6,100 if the stock were to end around $21.50. All right, so the third strategy and what I want to show you is going to involve NIO stock. So if I pull up the NIO chart right now on my screen, we know that NIO is a stock that I've been following for a very long time, and this stock has frustrated investors. However, it has honestly not really frustrated me. As someone who's just a stock investor hoping that NIO is going to go to the moon, it has been a very difficult journey. However, for option traders who are selling put options, who are selling covered calls, and who are just running different option strategies that I teach my students, we have basically had a blast with the stock because even though it has gone nowhere except for basically up, down, up, down, up, down, that's actually a fantastic thing for option traders because option traders love volatility, and also option traders can take advantage of a stock not going anywhere and still make a ton of money, whereas stockholders cannot really do that. So now taking a look, NIO is currently sitting right around the moving average that it has been at for the past 60 days. Yes, the stock has been lower, the stock has been higher. However, it's currently at the moving average, and I expect the stock to continue moving sideways until we see some really good numbers or some good deliveries, and that's not going to happen until early December. We're not going to know how many deliveries NIO had in November until December hits. So for this week, as an example, or if you're watching this in the future, if there's no catalyst, there's no earnings, or there's no deliveries for an EV company, then again, you can run a strategy that benefits from a stock going nowhere or really going sideways. So what I'm going going to do right now is I'm going to trade NEO options, very similar to what I've been doing. Now I'm going to start off with selling put. Again, I'm going to have the expiration date for November 26th. Pick your expiration date that you want to go for. Again, I recommend going for weekly. You can go for bi-weekly. Whatever date you're watching in the future, pick the expiration date that works best for you. Now, what I'm going to do is I'm going to sell a put option at the closest to the money, but slightly under than the current share price. So right now, NEO is currently trading at $40.24. I'm going to sell the 40 strike. Now I'm going to cover this up by buying the next leg lower. So I'm going to buy the 39 strike right now. And there we go. We have opened up a put credit spread. However, now what I'm going to do is I'm going to continue opening up 2 more legs. Now, the only thing I did right here on the top is I'm going to sell a call option. The call option that I'm going to sell is going to be nearest to the money, however, a little bit out of the money. So rather than going down to 40, selling the 40 and buying the 39, now I'm going to sell the 41 and I'm going to buy the 42. This is going to open up a short iron condor position. You can actually see here, unlike the other 2 strategies where we had to spend just a little bit of money and we could have turned a small sum into, 50% gain or a double or a triple on your money. Here, you're actually going to collect a credit. You're actually going to get paid. If I scroll down on the chart right here, again, you can see right here that the stock has to trade within a certain range. So as long as NEO stays within $39.18 and $41.82, you are going to collect a profit in this area. Now, your max loss is $18 and your max profit is $82. So in this scenario, you can basically 4x or even a little bit more than 4x your money on this single trade as long as NEO stays around this top area right here. So for me, this is one of my favorite strategies. This is what I teach a lot of my students because I love collecting a credit to begin with rather than paying money up front. I'd rather collect some money coming in. This strategy is a little bit more advanced. However, you can turn $180 into $820. If you enjoy strategies like this, or if you want to follow my trades and see how I'm trading live every single week, then you can join the private Discord community. It also does come with a course on learning exactly how to trade options. So if you want to learn a real skill that makes money and get results, then I'd recommend you submit an application to work with myself and my team. And make sure to check out more of my option trading videos.